Boom! We are live. Is it a bear market? Welcome to the show today, ladies and gentlemen. We are live still with the Arcane Bear. We're going to take a look at Bitcoin today. That's what we're going to be going over. I've got some fun charts lined up for you. I want to talk about the previous bear market cycles and kind of compare it with where we are today. Over the weekend, I actually spent some time drawing up a chart I think you guys will enjoy. So let's just dive into that. Okay, this is between 2011 and where we are today. So I don't normally use logarithmic charts, but one of the things I thought that this was nice to highlight was our accumulation cycles. Now, for those of you that are in the bear den or follow our channel frequently, you will know that I'm a huge fan of accumulation areas and then followed by the subsequent bull market. Now, bull markets are always shorter than bear markets, and bear markets are pretty much just the best time to be accumulating before we see another rise up in price. So back here in 2011 and 2012, to the very left-hand side of the screen here, we can make a full screen for you there. We saw an approximate accumulation cycle of around 400 days before the subsequent bull market into 2012, followed by a sharp 80% correction at that point. And then 2012 to 2013, you had an approximation of 225 days before the bull market continued to a new cycle high. And then both 2013 to 2017 and 2018 to 2020, you had accumulation cycles that lasted over 1,200 days. Now, the unique thing here is that both in 2011, 2012, 2013, the accumulation cycle was shorter, approximately 400 days. And then your up cycle was around 160 days. Here in 2013 to 2017, you had a 1,200-day cycle with an uptrend of around 350 days before the subsequent accumulation cycle took place. Into another 1,000 plus days, approximately, I think it was 1,090 from all-time high to the breakout of the box. And here now in 2020, it looks like we're in accumulation cycle again. Now, what I believe is happening is we're going to see something reminiscent of 2012 and 2011 effectively, where we have a much shorter duration accumulation cycle, something like a 400 days, 200 to 400 days. And we're approximately 120 days into this accumulation cycle since we hit the cycle top and are now coming back down. So there's very real evidence here that we could drop to around 18 to 20 grand. We've gone over that. And one of the ones I wanted to go over was what this looks like from the bear den. So I want to give a shout out to one of our esteemed private members. What we try to do is get everyone to do their own homework, and Glasswalker here has been doing a fantastic job with this redistribution chart. So we're just letting him run with it. I think he's spot on here. I think what we're about to witness is a drop, probably to around $23,000. So a lot of people are excited about reaccumulation, and in the early stages into phase B, we're like, okay, this could be reaccumulation, yet we don't know. You generally need to wait till phase C, and every day we go forward, this is becoming more and more likely that what we're about to witness is redistribution, not reaccumulation. In phases A and B, it could go either way, so you always want to be patient for that. Don't try to take big positions here. So this is looking more and more likely. But I want to go over the positive side note here, is that as we're looking at these accumulation channels, the time frames that are involved here, I wanted to bust up this one. This was from, Plan B. This is the stock to flow model with, I guess you could call it a type of Bollinger Band. Right now, what's really interesting is that we're actually at one of the lowest places Bitcoin's price to the stock to flow model has ever been. This is a very unique time here, and I think it has a lot to do with the capitulation. Oh, there's our stock to flow, our greed index. We're actually doing pretty good right now, only at around 19 between fear and greed. But here, this one. This is the total hash rate for Bitcoin. I think one of the reasons why we're seeing such a large capitulation is because of the mining that has left China. Now that's a huge amount of power, and B, a huge amount of money that basically got taken out of the markets in a very, very short order. We also see that aligning effect. As of yesterday, the amount of Bitcoin on the open exchanges jumped from 13.6 to 13.8. Very, very quickly, we jumped back from the previous support range, almost up to the high of where we were. Now, one of the things we want to remember is that the markets become more and more volatile. And when you see a big chunk of supply come onto the markets like this, it's usually not a good thing, and it's usually indicating that we're going to go lower. Now, how much lower? We want to dive in and take a look at the charts themselves. So this is the Bitcoin chart we've been following on the 4-hour. There is a case for a bullish scenario here. These falling wedges, sometimes like a falling wedge can be a bullish signal. The downside is here, well, first off, we're closing below the point of control, which is not a good sign. So it's very likely we're going to come down to 27, and we could come down as low as $19,000. Now, I don't think we go too much lower than that, technically speaking, but if we do go out and we look at the entire time frame on a non-log chart, we look at it from a linear perspective, we can see that fundamentally our biggest area of support is back down here between 12 and 20,000. So do we come that low? You know, you always want to be prepared for that potential. And one of the reasons why I think this chart is so valuable is because if you look back in time, everything below the high of 2013 was actually an accumulation portion, right? It just gave you more time to buy on your monthly cycle and basically ignore the price. Same thing 2012, 2011, and in 2018 to 2020. So this shows that consistency in your strategy as an investor is always one of the most beneficial ways to pay off. Now, some people call this dollar cost averaging. I'm much more interested in just consistent strategy, not like, oh, I've got X amount of dollars every year, I want to put this much in every month. Like, if you have more capital to invest in a particular point of the month, I usually try to do that. Not always in Bitcoin, but that's a varying factor of what we like to invest in. So overall, again, our fear to greed, we're sitting pretty low here. So anything in this area is good to me from fear to greed index, even if we drop lower in the price signature here, which is very likely based off our redistribution charts here, thanks to Glasswalker. What we can tell is that the consistency of strategy through your accumulation cycle is always important. And I said this as soon as we dropped the first time, is that what we're going to see is a period of time that is designed to basically bore people. And if we do come back down to test the top of the previous trading range, which we have seen in almost every cycle, not all of them, but almost all of them, then, like, again, we didn't test it in 2013, 2017. We didn't retest the top of the cycle totally, at least off the log charts. So one of the things we want to be aware of is our strategy throughout time. And when we're looking at charts like this, we're really trying to take advantage of this shorter time frame. So I closed out my 3 to 5 years worth of operating capital way back here. So I'm set. Whatever happens for the next 3 to 5 years, I'm good to go. And this makes a huge difference in the way you can effectively create a strategy, because what you're looking for is a month-to-month consistency for any good investment portfolio. At least that's my opinion. Not financial advice, ladies and gentlemen, just trying to share with you what I've learned over the years. So there's some interesting stuff going on. We'll quickly go over this, but I'm going to do a few more videos today. I'm going to try to segment these so we can go over Cardano and Ethereum, but in separate videos. But what I would like to do is just quickly take a look at the US dollar index. We have now butted up into the top of the trading range. This is really interesting to see, although we're seeing the weakness of the dollar here too. Look at the wicks coming off of the top versus the bottom of each of these. So what's important here to recognize is that the US dollar is actually having a much harder time trying to go up. It keeps getting sold down every time it tries to touch the top here, whereas the buy wicks are much shorter. So we look at the S&P 500, and we had a huge drawdown day today, and this is what we were looking for, and we're getting it now. So this also bodes to the idea that Bitcoin is going to drop lower. We can tell that when we start to hit an upthrust and distribution area in the general markets, it's not going to bode well for our market as well. So the S&P 500 gap down today, almost 4%, which is huge for the S&P 500. And lo and behold, what's this? Same thing in the NASDAQ composite. We're seeing our upthrust after distribution. So it's very likely here. And again, you can see this in the supply signature characteristics. For those of you that are studying Wyckoff really closely, or if you've read any of our private PDFs, you'll know that the law of effort versus result is extremely important. So here we can see the amount of effort it took to get up this high, and then how little effort it took to get down that same distance. So this is not good looking. Whoa! I didn't want to look at square there. Trading view. Give me my S&P 500 index back. There we go. So this doesn't look great. We've talked about this before. We've talked about how if the S&P 500 starts to come down, it could likely bode very poorly for our markets as well. And lo and behold, we wake up, we see that. We see that the S&P 500 has a distribution moment. The effort here was very little supply signature came in, and the price spread itself massively overstepped what it took to get here, right? So it took a lot to get here and very little to retrace that step. That's how the volume and supply signature works. You'd want to see the opposite on the upside. You'd want to see us going up on very limited supply. And then when we dropped, it would have to take probably a chunk more. Like if we were seeing chunks like this to get down that low, it wouldn't be as worrying, but it's very likely that we see a distributional moment. And this is one of the downsides and kind of one of the scary parts is that, you know, my assertion of an only up market since 2016 has played out to date so far, but at any moment over the next few years or months or weeks or days, because we don't know what the markets are going to do, we're very high up, right? We've been basically up only in the US S&P 500 since 2012. So since 2012, we've been going up only after we broke out of that trading range. Now, in 2016, when I made this assertion, it boded well for Bitcoin. Bitcoin managed to pretty much go only up, especially if you look at it on that logarithmic chart. But when you're here, if we start to see fear in the rest of these markets, Bitcoin is an extraordinarily volatile asset. So you want to make sure that wherever you're sitting right now, you're prepared to sit there for at least another 200 to 300 days. That's my recommendation. Again, not advice, but that's what I'm doing. I usually aim for 3 to 5 years, but I do believe that we were right on this particular ideal, that what we're going to see is a shorter 200 to 400 day accumulation cycle before we continue higher. So we've got a lot of confounding factors right now, again, between the lowest we've ever seen in the stock to flow model at this particular time, a massive amount of supply coming into the Bitcoin open market, creating, a much higher level of volatility. We're pretty much stacked low on both the hash rate and the greed index, so it's a little bit of an uneasy time. And then on our overall markets, we're seeing a lot of pressure to the downside too. So this could change. You know, we do see a fairly long-term trend line that we've been following up here with the S&P 500. So we could maybe make a guess here that as long as if we stay in this channel, we can maybe continue higher. But as of now, I would make sure that you are in at least the capability of absorbing whatever downside we have without it bothering you. And I did mention that the last time we hit $42,000. I said, hey guys, if you are in any overly presumptive positions here, you should be closing those. And again, I can't give you advice, just telling you what I'm doing. So where does that lead us? Oh yes, it leads us to a question and answer moment. If you would like, I'm going to be going over Cardano and Ethereum in later videos today, so those will be uploaded. I just wanted to take a look at Bitcoin and then give a shout out to Glasswalker for this beautiful redistribution chart. Okay, boom. Give us a thumbs up if you like this content, ladies and gentlemen. Thank you all for joining us today. This last part of the episode will be for live comments, questions, this type of thing only. So let's see where we're at. Okay, nice. I'm glad you guys enjoyed the new place. Mic is a bit soft. Yeah, it's always a hit and miss. You can never get it exactly right, it seems. I could try to turn it up maybe a little bit more even. Every time I move somewhere new, it's always trying to, like, I'm always basically readjusting. It makes it quite difficult to get it perfect. So I apologize about that. Maybe that's better. So you think this bull cycle is over? I don't think that look, technically speaking, if you go back and you really listen to what I'm saying, I don't think that the bull cycle has technically ever ended. Look at how this looks. What you have is just areas of accumulation, effectively. We haven't seen a market cycle down below any of the trading ranges in this logarithmic chart. Now, if we broke down below and started to chunk down, like, you know, we got a long ways down to go. You could go to $0 for Bitcoin, technically speaking, right? Not that I think that's going to happen, but it is a possibility. You must factor these things in. So every time we've gone up, we've just created a new trading range, which effectively means that we enter not a bear market, but an area for accumulation. This is one of the things I always try to remind people. One of the reasons why we use the bear as an emblematic function of what we do is because the bears are the fucking smart ones. They know that an accumulation cycle can take months to years, and that the best thing to do is be foraging and accumulating for when you want that food. Now, again, I think it's important to understand that the bear market is for accumulation. That's what bears are good at. Understand the emblematic relationship, right? Bulls are just idiots who run at everything that turns red. They're like, oh my God, it's red. The bears are the smarter ones. Trust me. Just think about it a little bit. Think about the emblematic function of each of the animals. One thing just chases red and gets all scared at the first sign, like, oh, it's red, oh my God. But the bears, on the other hand, they know how to accumulate, they know how to forage, they know how to save up for those difficult seasons. The bears are the ones you want to be, technically speaking. Now, I think the markets have drastically underestimated that by like, oh, bears just sell. No, bears accumulate. Think about what a bear does. It literally fills its cave with stuff and smashes his stomach full of food so he can survive a long period of time. Anyways, so I do think that this is going to be a shorter cycle. I'm assuming approximately 200 to 400 days. But we're going to wait and find out because we don't know. That's why, we said be prepared for ultimately a potential of 3 to 5 years of nothingness. Everyone's strategy has to be different. But if you go back to the functional emblematic idea of what a bear does, it accumulates, it fills what it needs, and packs its forage full so that it can withstand long periods of time of hibernation. This is the way you want to interact with these markets. So thank you all for joining us today. This was a lot of fun. We just figured we'd pop out a live episode. And we will see you guys again on the next episode. I'm going to do a few more. Again, we'll go over Cardano and we'll go over Ethereum on another video later today. So thank you all for joining us. We'll see you guys in the next episode. Boom.